market trends are two of our regular market analysts, Walt Hackney and Doug Jackson. Gentlemen, welcome back.
Thank you, Mark.
Walt, Doug, good to see you. Doug, let's talk a little bit about what's ahead now for this corn market. Producers out there, still some corn from 2003 that is yet to be sold. What would you tell a corn producer these days?
Well, Mark, we think the corn market long-term has just incredible fundamentals. And it's interesting, really, even though we characterize the producer as always being bullish, that the truth is that we've encountered very heavy farmer selling on this rally that ensued after the government report 2 weeks ago. And it's actually that heavy, pronounced farmer selling that has broken the basis and has really tempered this flat price rally. Since the Monday report 2 weeks ago, where the USDA lowered the crop by a record amount from November to January, we've seen the funds buy 100,000 contracts of futures, Mark. They now have, well, close to 200,000 long, about 185,000 long late in the week, a record long position. But that's because that report changed the fundamentals significantly 2 weeks ago, and we think is now setting us into a long-term trend, Mark, where very simply, we may have a 10.4 type demand base next year, something above the 10.2 record demand this year. And with no more additional acreage or no more significant acreage, we've got to have a record crop. We've got to think we've got a record crop all the time. And anything other than the anticipation of a record crop and a record yield and good weather, we think the arithmetic on this corn situation is explosive to the upside.
It's very early, but it seems like we haven't bought very many of those corn acres out yet.
Well, the problem is we have higher fertilizer prices. We have a bean market that's also bullish, attempting to pull acreage towards the soybeans. And so we're not expecting a major shift in acreage. In fact, we had a private analyst last week only estimate acreage up 300,000. But even if it's up 1 million, and typically we don't get shifts of more than 1 to 2 million, even if it's up 1 million or 1.5 million, that doesn't really change our corn story longer term, which is that with limited acreage, demand is catching up with supply, even at record levels now.
So you're not in a hurry to sell?
So we're not in a hurry to make sales here of old crop, although the old crop story is not that exciting. The real dynamics are in the new crop. We'd be very hesitant to make new crop sales unless we're doing it with like minimum price contracts, something that allows us to participate in this upside that can be fantastic if we ever have just the innuendo of a weather problem this summer.
All right, well, we had a weather problem last year. It did affect the bean crop. We're seeing the fruits of that in terms of prices. What's ahead for soybeans? Demand continues to be strong.
Well, that's exactly right, Mark. We have, the bean market is scared of its own shadow here. It's high priced, whereas with the corn, we might make a case that the downside is pretty limited. The downside could be substantial, particularly on the new crop beans, over a length of time. We could have a very bearish oilseed situation, 6 months to a year from now. We have a record crop in South America or close to it. We have good weather there. Harvest is beginning. We have about the same amount of beans in the Western Hemisphere today as we did a year ago when futures were $2 cheaper. But what we have also is a major, in fact, record dislocation of inventory. The beans are in South America. The stocks in the United States this spring will be the lowest in 22 years. How do we shut off demand fast enough now after a record first half usage to end up with any beans left? We have private analyst Mark suggesting July futures will go to $11 this year. We certainly have people projecting something well above the 830 type levels we've got today. How are we going to cut 10 million tons or 300 million bushels of demand from the U.S. in the next 6 months? How will South America ship 25% more beans and products in the next 6 months than they did a year ago? That's the arithmetic we face. Can we do it? Can South America ship that quantity, a record amount? I can't prove or disprove that to you, but we have some people think the United States will run out of beans later this year, and this thing will still be an explosive situation. But the problem at the moment is the funds are record long. We're at a relatively high price. Market's going to be very choppy, but we could still see volatility to the upside. My position is I'm going to dare South America to ship the quantities they need to. If they can't ship 25% more, which is made even more difficult with the ocean freight situation today, U.S. demand could be much stronger than expected, and we could run out, and prices could explode yet this year.
And again, we're talking old crop beans.
This is an old crop thing. Of course, the new crop balance table doesn't have room to tolerate a weather problem either. We've run out of acres enough to satisfy all the three demand bases here. So without any big increase in bean acres, if you have a weather problem, even a mild weather problem next year, the November futures are a $7, $8 item. So that's an interesting situation long term, but right now we're trying to figure out the old crop bean situation.
All right, well, let's talk real quick about the wheat market. We had $4 in Chicago. We've kind of been backing off. Well, what's ahead for wheat?
Well, if we look across the spectrum of the three major grains, Mark, we might make a case, if pushed, that the wheat situation is less bullish. The seasonals are starting to tug at us here as harvest is in the future. But the market's still very delicately balanced even in the wheat. We went into the winter with the third worst crop ratings on winter wheat in history. We've got the driest November, December, January that summer reporting in over 100 years in Kansas. So if this weather situation with this drought in the western United States does not change, we could still have an explosive wheat market. But we have good prospects in some parts of the rest of the world. The market knows that the Ukraine and Russia can increase supplies. We have a lot of competition in the wheat. The wheat can drift 50 cents lower with relatively normal weather. We might make some sales here, but again, watch this western drought.
Very good. Doug, let's go over to the livestock, and while we're going to talk to you about the drought,